For this session, we will talk about your book value per share. So we are to know the amount of our value per share in case there is a liquidation, or the amount that a shareholder will receive in case there is a liquidation. We call them your book value per share. So for your book value per share, we will look if ever we only have one share type or we have two share type. For one share type, of course, you only have OS. For two share type, you have OS and PS. So what is book value per share? Book value per share is the amount that would be paid on each preference share and ordinary share, assuming the entity is liquidated, and the amount available to shareholders is exactly the same amount reported as shareholders' equity. Therefore, this book value per share is trying to look at the amount that will be received by a particular shareholder in case of a liquidation. And that amount depends whether the shares are two shares for book value of OS and book value of PS, or only one share book value of OS. So we will try to learn how to compute in case we have two shares or we only have one share. If we only have one share, we do not have any problem here. Why? Because if we have one share to compute for your book value per share, what we do is we just get for the total shareholders' equity divided by your outstanding shares. That's how we compute if it's one share. But if it's two shares, you need to compute first for the book value or the share of PS before you get the share of OS. Okay. So how do we compute if ever there are two types of shares? So have your book value OS and book value PS. So first we get the book value PS, that is your total preference share divided by preference shares outstanding. For book value OS, that is total shareholders equity less total preference share divided by ordinary shares outstanding. You already know what is a share outstanding as we have discussed before. By the way, you also know that your preference share can either be a preference share as to, or it can be preferred as to dividends, or it has preference over the assets. Normally, preference as to assets happens if ever during liquidation, and we have already discussed that. Further, we also talk about your types of preference shares, whether cumulative, non-cumulative, participating, or non-participating. So I hope you do not forget those items. Here, when we talk about your shares outstanding, you still have the same computation of your shares outstanding. You need to deduct your treasury shares. You add your subscribed share. Now, for your BVOS and BVPS, one important factor is to compute for your total preference share. Okay? So later we will learn how to compute for this total preference share. But take note, your total share should exclude the subscription receivable. Sir, why is subscription receivable excluded in your shareholders' equity? Because under RA 11232, or your revised corporation code, when there is a subscription receivable, it should not be deducted to your share capital, because under this corporation code, whenever there is a corporate liquidation, the subscription receivable must be collected. This must be collected and must be used. So in short, it must be paid by the subscriber. At the end, there will be no subscription receivable. Take note, when we are computing your book value per share, we are looking into the possible amount that we will receive in case of liquidation. And now, under the law, if there is a subscription receivable, this must be first collected. In short, it must be paid by the subscriber. Then, if we assume that it must be collected and paid by the subscriber, therefore our subscription receivable should be zero. Our subscription receivable should be zero. That's why we need to exclude your subscription receivable. You all know that to compute, we have your shares issued, we have your shares subscribed less subscription receivable, right? Now, since we do not have subscription receivable, you just need to add the subscribed share capital. You do not need to deduct your subscription receivable. Okay? Remember that rule because, again, that is based on the laws of the Philippines. But if ever you are computing book value per share on other jurisdictions, they will only have your total SHE, whatever type of SHE is that, whether there is subscription receivable or not, and then they will just deduct the total preference SHE. But in our case, because our revised corporation code provides that subscription receivable should be collected, there should be no balance of subscription receivable during the computation for your liquidation, book value per share, or book value OS. Okay, so one important factor in your book value per share is the computation of your total preference SHE. Now, how do we compute for your total preference SHE? Total preference SHE is equal to your liquidation or par value of PS. So you can have your liquidation value. So what is that liquidation value? Liquidation value is the amount which the preference shares normally receive upon liquidation of the entity. It may be more than par or stated value. So if there is a liquidation value, you add it here. But if there is no liquidation value, you use the par value of PS. So we have here liquidation value or par value multiplied by your total shares outstanding. So what is your total share outstanding again? Your total share outstanding is equal to your issued plus subscribe less your treasury shares. Do not forget that. Next, we add any preference share dividends. Your preference share dividends depends whether it is cumulative or non-cumulative. If ever it is cumulative, of course, you add the dividend in arrears. If non-cumulative, you will only add 1 year dividend. Are we clear? If it is cumulative, you add the dividend in arrears. If non-cumulative, you only add 1 year dividend. Take note, guys, that if ever the problem is silent, you assume, if ever it is silent, you assume it is non-cumulative. Next, you have your PS participation. This happens whenever the preference share is considered participating. So how do we compute for your amount of participation? If you still remember, you give basic dividend before, right? But since we are in your book value per share, what we do is we have here your OS and we have your PS. We get first their par value or your total liquidation value. So total par value of OS and PS. What is this total par value? That is equal to your par value multiplied by your total share outstanding. What is your total share outstanding again? Your issued plus subscribed less treasury shares. You give your dividends in case there are dividends. So the dividends for PS, of course, that is the percentage multiplied by the fees, while your OS that is based on your lowest PS rate, lowest preference rate multiplied by your total par value. And then we also have your liquidation premium. Liquidation premium. Sometimes it is known as your liquidation value. But in case we use par value here, we use here liquidation premium. Okay. Since we use again par value here, we only use liquidation premium here. What is that liquidation premium? Your liquidation premium is equal to your liquidation value less your par value times your PS outstanding. Okay? So when we talk about liquidation premium, therefore, it is the difference between your liquidation value and your par value. And then after that, we have your remainder. Your remainder will be divided, again, participated by your OS and PS based on your total par value. Okay, so based on this amount. So if the amount here is 3 million and 2 million, then we have here 3 over 5, 2 over 5. And you already know how to compute those items. Okay? So here, in your total preference sheet, again, how do we compute? Your liquidation value or your par value of PS less your preference share dividends. Remember, if it's silent, it is non-cumulative. But if ever the problem tells you that it is cumulative, you need to add the dividend in arrears. You also add the preference share participation in case it is participating. The question is, how do we apply your participation? You already know how to apply for your participation when we talk about your dividends. But that is of dividends. Now, since we're talking about your book value per share, how do we get for your participation? So we have your par value, we add your dividends. For OS, we have your basic dividend. For your PS, that is the percentage multiplied by the face. And then we also have your liquidation premium. That is the difference between the liquidation value, if there is a liquidation value given, less the par value times preference share outstanding. And any remainder will be divided among them based on the value of the OS and the PS. Let's have an example and take a look into the computation of your shares book value in case we have cumulative, participating, and whatnot. Okay. So first you have your cumulative, non-participating. We also have your non-cumulative, non-participating. We have your cumulative, participating, and then we have your non-cumulative, participating. Okay. So let's assume that our total shareholders' equity based on this problem is 10.9 million. And then we have the following, which is included on that value. We have your subscription receivable, 50,000. And then we have your PSG, 1 million. That is composed of 1,000 shares. Let's say this is 12%. Let's say it is 12%. And then we have your ordinary shares, shareholders' equity. We have your 4 million pesos. And let's now try to compute if ever it is cumulative and non-participating. So if it's cumulative and non-participating, we assume that we have 1 year in a 1 year in arrears, 2 years na lang, 2 years in arrears. Okay, so let's have an example and we look into cumulative non-participating. So this is our first example, cumulative non-participating. So we said if there is a subscription receivable, we assume it will be collected as a whole. So you need to add it back. We have 10,950,000. Sir, why will we add it back? Because here in your subscription receivable, that is deducted on the first place. So in the instance that there is a subscription receivable in computation of your total sheet, you need to add it back. We have now 10,950. So we have your cumulative non-participating, we have your OS, and we have your PS. So first, we need to get for their par. So the par of OS is 4 million, for PS 1 million, total of 5 million. And then we have your dividends. Since it is cumulative, we give your 2 years dividend. So let's say 1 million times 2 years times 12% is 240,000. So this is 240,000. And then, do we have any liquidation premium? There is no liquidation premium given, so zero. Since it is non-participating, we will not give basic dividend for OS. So whatever is the remainder, to 10,950, 10.95 million less 5 million less 240,000, we have 5,710,000. 5,710,000. So if that is 5,710,000, we place it everything to your OS. Since again, we do not have any participation for PS. So what is now the total SHE for each type of share? We have 9,710,000 and we have 1,240,000 divided by the number of shares For PS, we have 1,000 shares. For OS, we have 4,000 shares. So 9,710,000 divided by 4,000 shares. We have 9,710,000 divided by 4,000 shares. We have 2,420, tama, 2,427.5. That is the book value per share. Well, for OS, for PS, we have 1.24 million times 1,000. We have 1,240. If it is cumulative, non-participating. How about if it is non-cumulative, non-participating? So again, we have here OS, PS, and your total. So the par value given 4 million, 1 million, 5 million. So since it is non-participating, we will only give this PS 1 year dividend. So the 1 year dividend is equal to 1 million times 12%, 120,000 pesos. Okay? 1 million, 120,000 pesos. Do we have any liquidation premium? None. So how much is the remainder? So if we have 10,950, 10.95 million less 5 million less 120,000, we have a remainder of 5,830,000. So remember, this must be equal to 10,950. So how much is for OS? We place everything to OS because it is non-participating. We have 9,830,000. And then we have here 1,120,000 divided by 4,000 shares divided by 1,000 share. What is the book value per share? Okay, so let's compute for the book value per share. 9,830,000 divided by 4,000. We have here 2,457.5, and then we have 1,120 for PS. Okay, so that if it is non-cumulative and non-participating. So how about if ever it is cumulative and participating? So we have here OS, PS, and your total. So first the par, 4 million, 1 million. So we have 5 million. And since it is cumulative, the dividends will be for 2 years, 240,000. While for OS, we will only have a basic dividend equal to your percentage in accordance with the percentage of your PS. Okay, so let's compute for the amount of the percentage for ordinary shares. So we have here 12% multiplied by 4 million. So we have 480,000. So 480 plus 240,000, we have 720,000. Do you have any liquidation premium? None. Next, the remainder. Let's compute for the remainder. This must be 10.95 million. So 10.95 million less 5 million less 720,000. We have 5,230,000. So this is the remainder which will be shared by OS and PS. So we have 4 over 5 because this is 4 million. And PS is 1 over 5 because that is 1 million. So 4 plus 1 is 5. So 4 over 5 of 5,230,000. We have 4,184,000. 1 over 5 of 5,230,000 times. Okay. 1 over 5 of 5,230,000 is 1,046,000. Okay. So we're done computing. So OS, how much? 4 million plus 480,000 plus 4,184,000. We have 8,664,000. And for PS, we have 1,046,000 plus 1 million plus 240,000. We have 2,286,000. divided by 4,000 shares divided by 1,000 shares. So how much? We have here 2,286. And then we have 2,166. Okay, so that's when it is participating. So just remember, how do we compute? First, we give for your par value, and then we have your dividend. So if ever it is non-cumulative, you only give 1 year. Cumulative, you give the dividend in arrears. And if ever it has a liquidation value, you give a liquidation premium that is equal to your liquidation value time less par value times number of shares. And if ever it is participating, it will participate based on the par value of your OS and PS. I know that you already know how to compute for those par value of OS and PS in your participation. But again, we just need to place emphasis on this because perhaps you have already forgotten it, even though we just finished discussing it last week. But I hope you still remember those items. Okay. So we will not compute already if it is non-cumulative and participating, because what changes only here is the amount of your dividend for preference shares, in which you will only give 1 year. Okay. So please do not forget how to compute for this book value per share. Do not forget to compute for your total sheet. Remember, the problem here only lies on your total sheet, especially if there is a preference share. So always remember liquidation value or par value. Then in case if there is no liquidation value, you use your par value. And then you add any dividend and you add any participation. So that you will not be left by the amount of OS, you can prepare a tabular form just like this. You give a share first of OS and PS based on their par value. And then you give dividend and you give liquidation premium and you give the remainder, whether it is participating or non-participating. Let's solve some quick problems. So TAR companies, stockholders' equity at December 31, 2006 consisted of the following. What is the book value of the preferred stock? So the preferred stock has a liquidating value of 55 pesos per share. And the preferred stock, it does not provide for any amount of uh, any type of cumulative or whether it is non-cumulative. So we assume it is non-cumulative. So first, we get for the par value of your preferred stock, 1 million. We add any dividend. So the dividend will only be 1 year. 12% times 1 million is 120,000. And we give any liquidation premium. So the liquidation premium is equal to 55, the liquidation value, less 50, the par value, times the number of shares. So 55 less 50 times 20,000, we have 100,000. So the total is 1,220,000 divided by 20,000 shares. We have 61 as the book value per preference shares. Or if you want a shortcut, you can just get the liquidation value 55 times 20,000 shares plus the dividend 120,000 divided by 20,000 shares, you will still get 61. Or you can have 55, which is the liquidation value, plus 120,000, which is the dividend divided by 20,000, you will still get 61. So whatever method, so long as you get the 61. I just want you to know the items presented in your preference shareholders equity, the par, the dividend, the liquidation premium, and in case if there is a particular participation, you add the participation. Another example, here we need to get for the book value of your common stock. So since we are to compute for your book value of common stock, let's prepare for our tabular format. So OS and your PS. So total par. The total par of your OS is 3.5. For your PS, 2.5. So this is 6 million. So the total SHE is equal to 2.5 plus 3.5 plus 1,250,000 plus 3 million. So this is 10,250,000. Okay? So after your total par, next we give your dividend. So we have your dividend in arrears total of 250,000. And then we have your liquidation premium. So if Hoyt were to be liquidated, would receive par value premium of 500. So the premium is 500,000. So how much is the remainder? So the remainder, 10,250,000 less 6,750,000. So we have 10.25 less 6,750,000. We have 3.5 million. So total of 7 million. Total of, we have here 3,250,000 divided by the number of shares. So how many shares are outstanding in your ordinary shares? 100,000 shares. 7 million divided by 100,000 shares. So our answer here is 70 per share. 70 per share. Okay, so here we computed it using a tabular format for you to see again how do we share if ever there is OS and PS. So once you remember and you master this tabular format, BVPS really is just an easy and a procedural type of problem. As long as you know how to compute for your dividend, how to compute for liquidation premium, and how to share the remainder in case it is participating or non-participating, this is a quick topic for you. Another example, Dick's company's stockholders' equity at December 31 consisted of the following. So we again compute for your book value per common share. Okay, so our total is 3.9 million, right? 3.9 million. So OS, PS, so the par value. So PS has a par value of 1 million. So this is 2.5 million, total of 3.5 million. We give dividends. So here it is cumulative. So if it is cumulative, we look into your dividend in arrears, 2005 and 2006. So that is 2 years. 2 years times 8% times 1 million. So we have here 160,000. And then do we have any liquidation premium? None. Therefore, the remainder will be provided to your OS. So how much is the remainder? If we have already shared 3.66 million, 3.9 million less 3.66, we have 240,000 that is left. So we have 2,740,000 for OS, 1,160,000 for PS. Oh, there is a liquidating value pala, 55. Sorry, we give the liquidating value. So 5 multiplied by how many shares? 20,000 shares. 100,000. So this is 3,760. This is 140. So 2,640, 1,260. 2,640 divided by the number of shares to 100,000 shares. 2.64 divided by 100,000 shares. We have 26.4. May liquidating value siya. Kaya kuha tayo dito ng liquidation premium, which is 5. So 55 less 50. Last example, Bow Company stockholders' equity at December 31, 2006 were as follows. 6% non-cumulative, preferred stock 100, liquidating value of 105, common stock 100, retained earnings 950, preferred dividends have been paid up to December 31. So it was already paid. We do not need to provide any amount of dividend as to your preferred stock. So OS, PS, the par, 1 million and 3 million. And then after that, we need to give the liquidating value. So the dividend is zero. Sir, why is the dividend zero? Because it was already paid up to December 31 and we are computing as of December 31. So after we get for the dividend, we get your liquidating value. So our liquidating value, our liquidating premium is equal to 105 less 100 multiplied by the number of shares, 1 million divided by 100. So this is 50,000. So how much is the remainder? So our remainder is 900,000. So we have here 3.9 million, 1,050,000. 3.9 divided by 10,000 shares, 390. So that is our book value per share for Bow Company. Okay, again, for book value per share, what is important is for us to determine the total preference shareholders' equity, which is composed of the following. First, the par value based on your outstanding shares, and then we give any dividend depending whether it is cumulative or non-cumulative. And then we give any liquidation premium that is equal to your liquidation value less your par value times the total outstanding shares. And if there is a participation, you need to give your participation. Okay? That is your total preference shareholders equity. So total SHE less total preference shareholders equity divided by total ordinary shares outstanding. This will give you your book value per share or the NARI. For preference shares, total preference SHE divided by your total preference share outstanding. This will give you your BVPS preference share. Okay, so do not forget these items. Once you know how this works, book value per share is easy and quite procedural.